Hi, everyone. Welcome to the IPSASB's webcast on its conceptual framework for financial reporting for public sector entities. My name is Dave Warren. I'm the Deputy Director of the IPSASB, and with me today is John Stanford, Senior Advisor. The reason why we thought this would be a really good time to talk about the conceptual framework is throughout 2023, the IPSASB has issued a few publications where there's been updates to the conceptual framework. The good news is I've got John here with me today who wrote those updates, and not only wrote the updates, but also was the original author of the 2014 document. So John, to kick things off, what is a conceptual framework and why does the IPSASB need one?
Okay, thanks Dave, and good to be here. Well, conceptual frameworks provide the principles that guide standard setters in developing financial reporting standards. They aim to ensure that standards are developed in a structured way and that they interact consistently. Conceptual frameworks also impose accountability on standard setters because they make the principles that they apply in developing requirements and guidance transparent and ensure that any reasons for diverting from these principles, for example, in the development of a financial reporting standard, that any such diversion are explained clearly.
So, John, that'll make sense to me. What was the process that you and the IPSASB used to develop the conceptual framework?
Perhaps we could just add one other further point. Although I think it's fair to say that conceptual frameworks are primarily developed to guide and impose accountability on standard setters, they do also provide guidance to preparers who are developing accounting policies for transactional events which aren't addressed in individual standards. Yeah, thanks, Dave. I'm moving on to the development of the framework and the process. Well, the project to develop the original conceptual framework started in 2006. And I think it's fair to say that the IPSASB's work in quite complex public sector specific areas such as social benefits and non-exchange revenue really underlined to the board at that time the need for a conceptual framework appropriate for the public sector. Development of the conceptual framework really was very resource intensive, and that partially explained why the IPSASB didn't develop a conceptual framework when the standards program was launched in 1997. In an ideal world, you develop a framework before you develop any standards, but the then Public Sector Committee needed to demonstrate that it had the capability and resources to develop standards, and that explains why it was some way into the standards program before the conceptual framework was developed. Now, in the period 2008 to 2013, the IPSASB issued numerous consultation papers and exposure drafts, and the responses to those documents helped shape the conceptual framework. And in that period, the framework really did dominate IPSASB's meeting agendas. The finalised conceptual framework was approved and published in the second half of 2014. Dave, we've talked a little bit about the role. Probably we should say something about the authority because that can be quite confusing.
Yeah, so John, that's a really good point, and maybe just to be crystal clear, that the conceptual framework itself is not an authoritative document. When you're preparing your general purpose financial statements and financial reports, where you look to for authoritative guidance are the individual IPSAs. So John, the way I think of a conceptual framework, I always like to use the analogy of a sandbox, and that's really the area that the board can play within when developing its standards. Now, I say a sandbox and it's not authoritative, so sometimes in rare circumstances, the board has been known to put a toe outside the sandbox, but for the most part, that's what the conceptual framework's for.
Yeah.
So John, I just talked about the authority of the conceptual framework, and I said it wasn't authoritative. So the question back to you then, John, is why did the IPSASB bother to update the conceptual framework in the past couple of years?
Yeah. Well, even though the framework's not authoritative, as I said earlier, it's important that IPSASB explains when and why it hasn't followed the framework, and it will do that in basis for conclusions of standards. Why did the IPSASB update the framework? Well, certainly when the IPSASB approved the framework in 2014, it decided not to give a timeline for reviewing or revising it. I think the IPSASB felt it was important to allow the framework to bed down for a period so that the board could gain experience in using it in standards development and maintenance and the development of recommended practice guidelines. By the time we get to 2018, the IPSASB had used the framework for 3 to 4 years, and it started to get a sense of its strengths and weaknesses. I think, as we're both aware, having worked in the measurement area, the IPSASB was particularly concerned that there was a dislocation between the conceptual framework's guidance and the standards level requirements for measurement. And that's one of the reasons we set out to update the framework in conjunction with the work which was going on measurement and eventuated in the approval of IPSAS 46 measurement and revision of a number of other IPSASs. So that's one factor. A further factor was global developments. In 2018, the International Accounting Standards Board published a revised conceptual framework, and that built on the 2010 framework. In particular, that revised IASB framework included an updated approach to measurement and revised definitions of certain elements. And the IASB also made some further small but important changes to the guidance on materiality the following year. So what that did was to lead the IPSASB to propose a limited scope update to update the conceptual framework. It was never the intention to wholly rewrite the framework. That was proposed in the 2019 to 2023 strategy document, and it received considerable support from constituents. So the IPSASB moved ahead, although, as you've said, it's non-authoritative. There was a full due process for this updating. That included issuing 2 exposure drafts, 76 and 81, and analysing the responses and taking those responses into account in the final developments. That eventuated in a fully revised chapter on measurement and an updated chapters on qualitative characteristics. That's chapter 3, and elements in financial statements. That's chapter 5.
So, John, that all makes sense to me, and I understand the factors that led to this update, but I guess tell everyone what they really want to know, John, and what have been the updates in 2023?
Okay. Well, as I've already indicated, I must stress that it wasn't an intention to rewrite the whole thing. The main changes were to the chapter on measurement, as I've said, fully revised. There's a new public sector specific current value measurement basis for assets held for operational capacity. That's current operational value, and we've also introduced fair value with the same definition as in international IFRS 13. That responds to the view that we should be using the same term in the same way as the other global standard setter, with very minor modifications for public sector reasons. What that's meant is that you've had new measurement bases. You've also had a number of measurement bases which were in the original framework that have been deleted. The main reason for that is that we didn't feel that their usage in standards is sufficiently prevalent to justify guidance in the framework. So we had, if you like, to strike a balance between having a very large number of measurement bases, some of which would be rarely or never used, and focusing on the most commonly used measurement bases. And we decided to adopt that latter approach. What that meant is that a number of measurement bases which had been in the original framework were taken out. For example, replacement cost, assumption price for liabilities, cost of release for liabilities. Market value, which was in the 2014 conceptual framework, was taken out as a result of the decision to include fair value. In the chapter on elements, there are revised definitions of an asset and a liability. In the case of an asset, pretty minor. And the guidance on those elements have been restructured so that it better aligns with the components of the definitions and therefore is more straightforward and easy to read. We've also got a couple of new sections. There's a new section on unit of account and a new section on binding arrangements that are equally unperformed by both parties. We didn't have sections on either in the 2014 framework.
So, John,
sorry, moving on.
Yeah.
In the chapter on qualitative characteristics, there's new guidance on the role of prudence in supporting neutrality in the context of faithful representation. Previously, there hadn't been any reference to prudence in the core text of the framework. However, I should add that we are not adding prudence as an additional QC, as a further QC. One of my hobby horses, there's a small but significant addition of obscuring information to misstating or omitting information as a factor relevant to materiality judgments. And that's at a conceptual level, an acknowledgement that, for example, voluminous disclosures of immaterial items can actually have an adverse effect on the usefulness of financial reports to users. That's a perennial issue in the public sector. Sometimes it could seem that there's a little bit of a checklist mentality towards disclosures. And here in the framework, we're actually giving a warning that adopting an approach where you have all sorts of immaterial disclosures can actually be quite damaging. Okay.
So, John, you talked about something that made me think of another question is you talked about how the fair value definition aligns with IFRS 13 in the IASB's literature.
Yeah.
What's the relationship between our conceptual framework and the IASB's conceptual framework?
Yeah, thanks for that, because it's an issue which certainly crops up quite regularly if you're talking to people at conferences, for instance. Well, the IASB's conceptual framework was designed specifically for the public sector, and neither the original project nor the project to update the framework sought to align with the IASB's conceptual framework with the IASB's conceptual framework. And that approach actually did give the IASB the space to develop guidance that reflects the primary objective of most public sector entities, which is delivering services to the public rather than making profits, generating cash flows, generating a return on equity to investors. And the framework actually has a preface which identifies some of the key characteristics of the public sector, which were very much at the forefront of the board's thinking when they developed the original framework. That's, for example, the prevalence of non-exchange transactions in the public sector, the significance of the budget at governmental level, and the fact that the budget is very often a publicly available document, the way in which property, plant and equipment is used. So all factors that we felt the board needed to respond to. Regardless of that, the IASB considered both the IASB's 2010 framework and the more recent 2018 revision extremely influential. And the board, although as I say, it's not a non-alignment project, the board were quite keen to ensure that where a different approach had been adopted to the IASB, there was a sound public sector reason for that. And consequently, it was one of the two main factors which led the IASB to launch that update going back to 2019. as a final aside, we're issuing a staff questions and answers paper, and an appendix to that paper actually identifies at a very high level differences between the ISB framework and the IPSASB framework. Back to you, Dave, on how you see the future of the conceptual framework. I mean, to be honest, I've been so close to it that I really do risk losing a sense of perspective on how the framework is going to inform the work of the IPSASB in the future.
Well, John, that's a really interesting question, because I'd say the easy answer always is it's going to be the bedrock for the IPSASB developing IPSIS going forward.
Right.
But as we head into our next strategy period, which is 2024 to 2028, the IPSASB has proposed a greater focus on maintenance of IPSIS. That's going back and looking at published IPSIS and determining whether there needs to be changes to those and amendments to those to deal with stakeholder concerns and challenges in application and practice. And again, that's going to require going back to the conceptual framework and making sure everything fits in with the sandbox that they're allowed to play in.
Yeah.
The other point, John, and this goes back to your last point on how the conceptual framework was designed specifically for public sector entities. Earlier this year, the IPSASB decided to begin sustainability reporting work.
Yeah.
And what the IPSASB decided was now wasn't the appropriate time, or maybe ever, to develop a conceptual framework for sustainability reporting. But to your point, because of the unique aspects of the conceptual framework, they've taken into account what a reporting entity is in the public sector, unique characteristics of the entity in the public sector. It's going to work as a really strong foundation in developing our sustainability reporting work for at least the next 5 years. Yeah. So to answer your question, I can see it being used all the time, day in, day out for the next 5 years for the various activities that the IPSASB is entering into.
Yeah, thanks for that, Dave. And I mean, I think that probably vindicates one decision that the IPSASB made all those years ago, which is that certain chapters of the framework should apply to general purpose financial reporting more broadly than just the core financial statements. Some of the chapters, for instance, those on elements and measurement, relate just to the financial statements. But the fact that the chapters on qualitative characteristics, on role and authority and objectives of users are directed more broadly at financial reporting, I think means the framework can continue to be relevant to that broader financial reporting scenario. Okay.
So, John, one last question from me before we wrap up. Did you want to say anything on effective date?
Well, yes, indeed. The framework, as we discussed, is not authoritative, and the 2014 framework did not have an effective date. We decided that we should retain that approach when we updated the conceptual framework. So the conceptual framework doesn't have an effective date like the core of the standards in IPSASB's literature. The framework became effective on the IPSASB on approval, and that reflects the fact that we think, once it's up to date, the IPSASB should be using it in its standards development and maintenance work, not waiting for 18 months or 2 years before applying it. So for that reason, we don't have the type of effective date that many of the listeners will be familiar with from reading our individual standards.
That makes a lot of sense to me.
Okay.
Well, thanks, John, for sharing your knowledge with us on the conceptual framework. Thank you very much to you for joining to listen. I hope you found it helpful. If you want more information, please look at our website, www.ipsasb.org, and you'll see some further publications and other news related to the conceptual framework update. With that, thanks again for listening, and enjoy the rest of your day.
Thanks from me too. Bye-bye.
Bye, guys.